This is Gary Schnitke, and this is a 5-minute Farm Doc Daily dealing with corn and soybean use, and in particular the need to increase demand someplace to get higher corn and soybean prices. Corn and soybean prices tend to reach plateaus and then increase from those plateaus when we have more use in some particular area. For corn, that increase in use came from ethanol, and that ethanol build happened from 2006 to roughly 2010 when we increased corn use in making ethanol by 78%. Since then, corn use in ethanol has been roughly stable, and we've seen, after that ethanol build, corn prices remain roughly stable. In recent times, we've seen corn use decline primarily because of coronavirus concerns and social distancing measures. That has resulted in less use of corn in ethanol, and that will likely continue into the foreseeable future until we stop COVID-19 social distancing measures. Those periods when we had corn use increase again corresponded to a period when we saw corn prices increase. Here we saw those increases from a plateau of 240 prior to the ethanol build. After that, we saw much higher prices, and then we increased them again because of a drought in 2012 and a short crop in 2011. Since that build has ended and those short crops ended, we saw corn prices decline. And again, the coronavirus brought those prices lower. The same thing roughly happened with soybeans. We've seen soybean use grow over time. Crush has increased, but probably more important has exports of soybean to primarily China. That has grown such that exports now account for more of the use of soybeans than does crush. Again, in 2018, we saw those exports decline primarily because of trade difficulties with China. Those declined, and we also had the COVID-19 impacts as well in 2020. Those two things have resulted in lower use. Here we're showing projections for 2020. You will notice that they rebound. Whether or not that will happen will be a good question, but that's roughly consistent with the U-shaped recovery or V-shaped recovery in our economy. Similar to corn, we saw those prices decline after the 2011-2012 build. Soybean prices went up because they had to compete with corn, and again, we saw those prices decline because of trade difficulties and coronavirus concerns. Even if we get coronavirus and trade concerns behind us, we will still likely see lower prices, and those lower prices primarily are because our uses are not growing as fast as our supply is. We are growing corn and soybean supply because of increases in yields. That will have a downward impact on prices. So we're going to still see low prices even after coronavirus is gone. For the foreseeable future, I would expect a sort of a plateau of corn prices at $350, $860 for soybeans. We're above that currently, so this might be a buying opportunity, but sort of $860 for the next 3 or 4 or 5 years, and again, $350 for corn. So build our expectations around those prices.